All right. So again, in order to subscribe to the SMT newsletter, I'll put a link in the description below. So while we're waiting for metals to complete the daily cycle low and start the advancing phase of the second daily cycle, I want to show you what the other part of our portfolios are doing. So right as we came out of this daily cycle low here, my recommendation was as I've been saying in my in these podcasts, I believe we're in the starting the second phase of a bubble. So I wanted to get people into the stock market. So my recommendation has always been a third of the portfolio in metals, a third in energy, and a third in stocks. So for stocks, semis have been leading this bull market. So we definitely wanted to be in the leading semiconductor sector. So this is where we got into our semiconductor trades. We've been holding ever since. The other area that was primed to make a very nice move is the small cap. So we got in. We didn't get in quite at the exact bottom here, but we got in right here as it was breaking out to new highs. I'll widen this chart a little bit. So, we saw this breakout coming, knew it was going to produce a big move. So we were in here, and again, we've just been holding this. And as long as the NASDAQ doesn't drop back below 13,000, we'll just keep holding this under the assumption that we've probably got another 2, 3, maybe. I doubt that we have 4 months, but I think we probably got at least 3 months before this bubble pops. The other area of the portfolio, I think maybe in some of my recent podcasts, I also noted that I think we're starting an inflationary phase. The entire CRB complex is going to benefit, especially oil. All of this nonsense about the Green New Deal. The world is not going to be able to operate without oil. So this sector is not going away, and it's been beaten down for years. Maybe even more so than the mining stocks. So I told traders that I thought this was a good place to get in for a very long-term 4 to 5 year hold. So this is where we bought, and my recommendation was either XLE or the OIH. Or a combination of both. So we've just been holding these energy positions since right here, right as we came out of that intermediate cycle low. Same thing for the OIH. We've just been holding since back here. So while we're waiting for the other third of the portfolio to start, getting in gear, we're just collecting free money from these trades that are working, and I expect them to continue to work. And certainly, there's going to be a point somewhere where we're going to get a correction, and we'll probably get a scary correction. Usually, when you start to get close to the top of the bubble, the market will start to get really volatile as smart money will start to become nervous, and you'll get some profit-taking events. That will, you could get 10 to 15% corrections in a very short period of time. That's usually a sign that you're getting close to the top, but I don't think we're there yet. And like I said, the bubble is going to be in tech, just like it was. Well, it always is. And as long as the NASDAQ is holding above 13,000 here, then I'm not seeing any indication that we're ready for any correction just yet. So this is our stop. Any move or any close below 13,000 on the NASDAQ would be our signal to deleverage and maybe lighten up just a little bit on the portfolio under the assumption that we're finally going to get some kind of corrective move. And then you want to buy that correction because we probably still got 2 or 3 months to go before this bubble reaches a top and pops. So again, if you want to subscribe to the nightly SMT newsletter, I'll put the link in the description below for that.